From a loss in June 2009, we're now looking for 6 months at an EBITDA of 110 million rand. And where to now, Terence?
Key for us are the growth projects. We've made rapid advances at the Kinsenda project. We look to be taking that to the board sometime into April or May. We've already presented that to our partners in the DRC. They were all here last week. And it looks like it could be all systems go with this project. Obviously, we need board approval at the end of it. But that's another project which could potentially add another 20,000 tonnes of copper per annum onto our current annualized rate of around about 54,000 tonnes of copper. We've turned the corner as far as Ruwashi is concerned, and we're getting excellent performance out of Chibaluma. They've shown record production over this last while. They're into uncharted territory as far as their performance is concerned. We would expect even more production out of Ruwashi. We now have 2 spare transformers. One is at site, and the other one actually left Johannesburg this week. From a cost perspective, the mines are doing really well, with all-in costs at Ruwashi at just on $2,200 per tonne of copper, and at Chibaluma $2,900 per tonne of copper. That bodes very well for us in terms of positive earnings and an ability to fund our growth projects.
And do you think you can maintain these margins? What is the outlook for this copper price? It's been a very sweetheart copper price. Do you think it's going to continue at the sort of $10,000 per tonne level?
The prices have been very positive, and we're very pleased. The outlook and the fundamentals around copper still remain very strong. Supply is stressed, and demand continues to increase.
You've spoken about Kinsenda, which seems to be the best. What about Ruwashi sulfides?
The Ruwashi sulfides project, we're announcing that for the first time. We've always said that there were sulfides below the oxides at Ruwashi. We've done some drilling. We've managed to increase the resource there from 8 million tonnes to 15 million tonnes, and we've already moved 1.5 million tonnes at 83% copper into the indicated category. It's now about doing a lot more exploration. We're going to spend another $1.1 million on exploration, and looking how we can harness the original phase 1 plant, which is in place at Ruwashi.
And can you give me a better insight into the capital expenditure, the money that you're spending, the stay-in-business capital, but also the growth capital?
The primary spend obviously would be Kinsenda. That project is anywhere between $130 and $150 million. So that would be the primary project capital for now. The other project capital is the completion of the acid plant at Ruwashi, which should be up and running by mid-year. There's another $6 million there. But the other capital is already ongoing capital, and that's the stripping of Pit 3 at Ruwashi, which is going to take a substantial amount of capital, as well as the ramp development at Chibaluma.
You operating both in the DRC and Zambia. Both these governments have ambitions.
We support the notion that you should beneficiate where you are, but it should be done on the basis where it makes commercial sense. We do produce cobalt hydroxide, which we obviously export because that's what the market wants. If one looks at the copper we're producing in the DRC, that is metal already. If one looks at the project at Kinsenda, there's 2 possibilities here. One is we will produce a concentrate, which is a sulfidic concentrate, and that could be exported. That would have 40% in copper in concentrate. The oxides that would come out of Kinsenda, we would convert that to metal by sending it to the Ruwashi plant. But we're always looking for opportunities to further beneficiate.
And I noticed a note on the SENS about Zambia and tax. Is there an issue there?
It's been a challenge since the GRZ changed the rules of the game for us. We've continued to talk to the government. We're talking with the other mining companies. It hasn't been resolved, but we're playing the game there. I think it's in the interest of both Metorex, the other mining companies, and the government of Zambia to bring this to conclusion. But at the moment, we are paying in terms of our development agreement. We're paying in terms of the increased royalty. We're paying in terms of the increased tax.
We know that Chile is producing, but we look at those grades versus the grades of this Central Africa, this DRC. You are in the sweetest copper spot in the world.
We do know what's happening in Chile. We do know that the big mines are coming down in grade and volumes. And this provides us with an opportunity to further develop the wealth of those countries. You might not find the tier 1 deposits, although one can't argue against Tenke Fungurume and the like. But there's a niche there for smaller deposits, higher grade, which don't necessarily meet the criteria of the large companies. And that's where our opportunity is.
Should we be becoming more aware, sitting here in Johannesburg on the JSE, of the potential of being the financing house?
What we've seen in and around us is many, many Australian companies, many, many North American companies, Canadian companies that are actually part of developing the region. Overall, I would anticipate that it's still going to be a combination. I don't think Johannesburg can say it's going to be the lead player here. I'm afraid with the copper business where it is, there's interest worldwide.
With the technical difficulties out of the way, what is your outlook for production?
We will definitely improve upon what we've just announced, and that's on the copper production at just over 26,000 tons and cobalt at 2,000. We probably won't increase much more on the cobalt side, but certainly on the copper side. If we don't have a 5-week interruptions to copper production like we did have in the last 6 months, that number will definitely go up.
We used to associate this company with big debt.
18 months ago, we had just over 2.2 billion rand in debt. That in gross debt is reduced to 850 million. We have 400 million in cash at the moment, thus our net debt position at 416 million. We're very comfortable with this debt.
Can you fund your growth at the moment?
We're certainly looking at doing that. We're also looking at possibly putting in a $66 million facility for the development of Kinsenda mine. That's all that we will need. The rest we will take out of cash flow.
What are your next steps?
Well, from the Kinsenda project perspective, we're nearing completion with the feasibility study. We're in a situation where we're completing the resources and reserve statements. The mine design is just about complete. And we're looking to take this project to the board. We have initiated an additional drilling program at Kinsenda to step out from where we did the drilling last year. And the board approved that last Thursday for another $2.1 million. And that is to look further west.
What do you hope for going forward?
It's organic growth for the moment. We're not looking anywhere else. We're not getting distracted. And on that basis, we're looking to grow production and increase our presence around the assets that we currently have.